So, what if the very foundation of global finance wasn't just shaking a bit, but was actually maybe about to be completely repoured?
Mm.
Imagine a world where, the money in your pocket, the assets in your bank, even how global trade happens,
Mm-hmm.
it all just shifts fundamentally.
It sounds pretty radical.
It does, and
But
that's the scenario, the mind-bending one we're diving into today. And it comes straight from, well, one of the true architects of the whole crypto universe.
yeah, we're talking about Adam Beck, and this isn't someone just, watching from the sidelines. He's been right there in the thick of it since the very start.
The inventor of Hashcash.
Right, exactly, the proof of work system that really paved the way for Bitcoin's own mechanism. I mean, he's literally mentioned in Satoshi Nakamoto's white paper.
Wow.
So this vision, it's coming from someone who actually helped lay the groundwork. It's not just speculation.
Okay, right. So with that kind of background, this isn't just another wild take. Our mission today really is to unpack Adam Back's incredibly bold, sometimes provocative view, which is that Bitcoin isn't just, another asset class. It's a force that he thinks is destined to basically reconfigure, maybe even absorb a huge chunk, maybe all of the traditional financial system.
It's a massive idea.
Totally. So we'll explore what he means by hyperbitcoinization, the core Bitcoin features that back up his claims, the sort of real-world goals he sees for adoption, and, importantly, the big challenges that stand in the way.
Yeah, the hurdles are definitely there.
So by the end, you should have a pretty good handle on one of the most, audacious visions shaping finance right now.
Okay, so at the heart of it all is this term Back uses, hyperbitcoinization.
Yeah.
He sees this as a gradual, but he believes inevitable process. Bitcoin moves beyond what it is now and becomes the main global reserve currency.
Replacing fiat currencies,
Yeah.
like the dollar, the euro.
Progressively, yes, that's the idea. And his reasoning basically boils down to two things. The inherent instability he sees in traditional currencies, inflation risk, and this growing kind of fundamental loss of trust in centralized financial systems.
Okay, so if he's talking about completely re-architecting global finance, what are the big objectives he's actually aiming for? It can't just be about Bitcoin's price going up, surely. There must be a deeper why.
Oh, absolutely. It's much, much broader than just price. For Back, the number one goal is establishing Bitcoin as the ultimate global reserve asset.
Better than gold. Better than the dollar.
That's the argument. He believes it surpasses them in provable scarcity security, and crucially, censorship resistance. He frames it as, the ultimate protection against monetary devaluation.
So an escape from inflation and money printing.
Exactly. A decentralized, deflationary alternative to the systems we have now. He designed aspects of this thinking way back, and a huge part of that, naturally, is decentralizing financial control.
Right, getting rid of the middlemen, the reliance on banks and governments controlling the money supply.
Precisely. Reducing that reliance, empowering individuals, giving them financial sovereignty. And he argues this builds a stronger, more transparent financial system overall, all based on the Bitcoin blockchain's immutability.
Okay, but these are big, abstract ideas. Does he get specific about how this absorption actually happens? What are the tangible steps?
He does, and this is where, the numbers get pretty wild. He lays out some remarkably specific goals.
Yeah, I've seen some of these projections. He talks about Bitcoin hitting a truly massive market cap figures like, $200 trillion in the next decade?
Staggering numbers, yeah. And that's not just about growth for growth's sake. It's signaling Bitcoin becoming the primary asset, towering over traditional things like gold and bonds.
How does that happen? Just people buying it?
Well, a key driver he sees is massive global institutional adoption. He's talking about the really big players, pension funds, sovereign wealth funds, insurance companies, major corporations, starting to allocate serious portions of their portfolios to Bitcoin.
So the institution's finally jumping in a big way.
That's a core part of the thesis,
Yeah.
but it's not just about them holding it, like you said earlier. The operational side is critical.
The plumbing, basically.
Right. He stresses the need to massively scale up layer 2 infrastructure, things like the Lightning Network for, fast, cheap, everyday micropayment.
The coffee and stuff.
Potentially, yeah.
Mm.
And then there's the Liquid Network, which, his company Blockstream is heavily involved with. That's a sidechain designed more for faster, larger, and importantly, confidential transactions between institutions.
Ah, okay. So different layers for different needs.
Exactly, because you need that kind of infrastructure to handle the sheer volume of transactions if Bitcoin were to become a truly global financial system.
And it also needs to be used for buying things, not just saving. Right.
Absolutely. He emphasizes fostering widespread acceptance as a medium of exchange for everyday goods and services, moving beyond just being digital gold. And sort of underlying all of this is the need for a supportive regulatory environment.
Yeah, regulation always comes up.
It has to.
Yeah.
He points to the need for frameworks that legitimize Bitcoin, allow it to integrate, but without, killing the innovation that makes it work in the first place.
Okay, these are huge, audacious goals. But why does he think this is even possible? What are the fundamental pillars, the core properties of Bitcoin itself that make him believe this?
Well, the first one, and it's probably the most fundamental, is Bitcoin as the ultimate store of value. The digital gold idea.
Because it's scarce.
Exactly. Part really hammers on its program scarcity, that fixed supply, 21 million Bitcoins, period, full stop. And he sees this as revolutionary because, unlike fiat money, which governments can print more of whenever they want,
Limitlessly, yeah.
or even gold, where you could theoretically find a massive new deposit, Bitcoin supply is mathematically certain, it's fixed, verifiable, unchangeable. Coming from cryptography, he sees this as maybe the first perfect, unforgeable scarcity humans have ever created.
Making it the ultimate hedge against inflation, currency getting devalued, that kind of thing.
That's the core argument. And the halving events, which happen roughly every 4 years.
Where the reward for miners gets cut in half.
Right. They reinforce this scarcity. They systematically reduce the flow of new Bitcoins entering circulation, creating this predictable, ongoing disinflationary pressure. So he really sees it as a fundamental refuge, especially when traditional systems start to wobble.
Like during crises.
Absolutely. Economic crises, geopolitical instability, banking meltdowns, major conflicts, currency failures. He views Bitcoin as an ideal safe haven in those moments, precisely because it's decentralized and censorship resistant. No single government or entity controls it.
Okay, that makes sense. And you mentioned institutions earlier. That's another pillar, right? The adoption wave?
Yeah, the acceleration of institutional and even governmental adoption is another key pillar for him. The approval of the spot Bitcoin ETFs in the U.S. in early 2024. That was a watershed moment.
Definitely felt like one.
It provided a regulated, familiar, easy-to-use way for major financial institutions to finally get exposure to Bitcoin directly.
And for Bick, that's not just about new money coming. It's like the starting gun.
Pretty much. He sees that institutional validation as the prelude to really large-scale capital reallocation. Billions, potentially trillions, moving into Bitcoin, driving that exponential growth in its market value. He even floats the idea that sovereign wealth funds,
National Reserve funds.
yeah, the traditionally super conservative ones, might start looking at Bitcoin for their long-term reserves.
Well, that would be a game changer.
Which leads us right back to hyperbitcoinization itself and those, frankly, astonishing price projections he makes.
The $10 million Bitcoin.
Right. He envisions this gradual transition, remember, not a sudden collapse of fiat, but a steady shift.
Yeah.
Bitcoin takes on more and more monetary roles, starts with high-value cross-border stuff, then maybe larger institutional settlements, eventually filtering down to daily use, micropayments.
And that $10 million projection, I think he ties that to the sixth halving. Around 2032.
Approximately, yeah. And it's based on the assumption that Bitcoin captures significant chunks of the value currently stored in gold, in bonds, and even in the broad fiat money supply itself.
It's just a staggering number to even comprehend.
It is. And to support that kind of scale, you absolutely need those advances in scalability and infrastructure we talked about.
The layer 2 stuff.
Exactly. Back's conviction in layer 2 solutions like Lightning, and especially Liquid, is central to his vision. He sees them as the essential plumbing needed for Bitcoin to handle the transaction volume of a global financial system without breaking its core principles of decentralization and security.
But he does admit it needs to get easier to use.
Oh, yeah, definitely. He acknowledges there's still work to do on simplifying wallets, making things interoperable, just making the whole user experience smoother for mass adoption. It can't stay niche tech.
Makes sense. And what about the wider world? The economy, politics?
Yeah, the final pillar he points to is these powerful macroeconomic and geopolitical tailwinds. Things like ever-increasing global debt, very expansive central bank policies, quantitative easing, low interest rates for years, persistent
The
inflation.
stuff we're all feeling.
Right. He argues this stuff is actively pushing people and institutions to look for alternatives outside the traditional fiat system. And then you add geopolitical conflict, global fragmentation, that can accelerate the move towards neutral, decentralized assets like Bitcoin that aren't controlled by any one nation.
And regulation. You said that could actually help.
Counterintuitively, yes. He thinks clearer, more favorable regulations like the MiCA framework in Europe or the US ETF's approval can actually facilitate Bitcoin's integration. It gives bigger players the green light, the clarity they need to get involved.
Okay. It paints a really compelling, if maybe a bit unsettling, picture of potential transformation. But in no way it's that simple. There have to be huge roadblocks, right?
Yeah.
What could actually stop this vision in its tracks?
Oh, absolutely. There are massive hurdles. Probably the biggest is global regulation and outright government resistance.
Governments not liking losing control of money. Shocker.
Exactly. If mass Bitcoin adoption is seen as a serious threat to monetary sovereignty, you could see really strict regulations, maybe even outright bans in some places, or the rapid rollout of their own digital currencies.
CBDCs, central bank digital currencies.
Right, designed specifically to compete with or even undermine Bitcoin's appeal by offering a state-controlled digital alternative.
And then there's just the sheer technical lift, right? Scaling Bitcoin to handle billions of transactions every single day globally.
It's a monumental challenge, even with layer 2 solutions like Lightning getting better, scaling that far without compromising the core decentralization and security that makes Bitcoin valuable in the first place. That's a really complex technical and adoption puzzle. Still lots to figure out.
Plus, let's be honest, the price swings are wild.
Yeah, the short-term volatility is definitely a factor. Even if you believe in the long-term store of value argument, those huge price swings in the short to medium term can really scare off more cautious institutional money and certainly retail investors trying to use it day to day. It slows down that acceptance as a medium of exchange.
It's hard to budget if your money's value jumps 20% overnight.
Precisely. And then there's the whole public perception and education piece. It's still an uphill battle. Bitcoin can seem technically complex, hard to grasp for the average person, and it still fights these negative narratives.
Illicit activities, energy consumption.
Exactly. Those narratives, whether entirely fair or not, limit broader acceptance and just basic understanding. There's an education gap.
What about security? Is the network itself safe?
The core Bitcoin network is incredibly secure, arguably the most secure computer network ever created. But the risks are still there. Wallet security, people losing their keys, getting hacked, that's a big one. The security of exchanges where people buy and sell is another. And then there are theoretical, though very difficult, potential attacks on the network's mining infrastructure, the hash rate. These risks need constant management.
And competition. Are there other cryptos that could steal Bitcoin's thunder?
It's possible. The crypto space moves incredibly fast. New technologies pop up all the time, maybe offering advantages in speed or features. But, so far at least, nothing has managed to replicate Bitcoin's unique combination of genuine decentralization, proven security over time, and that fixed, immutable supply.
Yeah.
But you can never rule out competition.
And just using it.
Yeah.
For regular people.
Yeah, that complexity and learning curve is still a barrier. Let's face it, for the average person, understanding private keys, public keys, transaction fees, it's still more complicated than tapping a card or using a banking app. User experience needs to keep getting simpler, much simpler for true mass adoption.
Okay, so wrapping this up then, let's bring it back to you, the listener. Adam Back's vision. It's genuinely audacious. The long-term bet, really rooted in what he sees as Bitcoin's fundamental unchangeable properties. Its scarcity, its decentralization, its resistance to censorship. It's not just about the price hitting some crazy number. It's about a potential systemic transformation where Bitcoin could actually become the main global reserve asset, the foundation for a future financial infrastructure.
And for Back, the catalysts are already in motion. That growing institutional adoption, the ongoing work on scaling solutions like Lightning and Liquid, and this backdrop of, well, a pretty volatile and uncertain global economic and geopolitical landscape.
Right.
He sees these not just as trends, but as the key forces, almost the inevitable drivers pushing towards this hyperbitcoinization.
So the final thought to leave you with is this. If Adam Back's vision even partially starts to play out, What does a future increasingly built on Bitcoin actually mean for the stability, the reality of your own financial world? And how might you even begin to navigate that kind of profound shift? Something to think about.